Hi there, everyone. Thanks for joining us today on this Wednesday strategy webinar, the 26th of November. We're going to take a look at various strategies in Forex trading. But as you know, first of all, this disclaimer explaining the fact that this webinar is intended for a global audience, therefore it may not be suitable for everyone. To get the corresponding info on trading conditions and whether this is indeed suitable, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware of the fact that trading Forex and other financial products is high risk and therefore may not be suitable for all investors and traders. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with the disclaimer, and you can request a copy as well through the appropriate entity of your country at admiralmarketsglobal.com. So, today we're going to take a look at the various strategies using moving averages, pivot points, trend lines, and fibs, and see if there's any opportunity to trade, very simply put. If you are new in here by any chance, please let me know. That's always quite useful for me to see who might need some more explanation or information that is connected to things that I think that most of you already know if you've been here more often. So with the news, we have pound GDP as the main event this morning, and New York morning has core durable goods orders and home sales. Now, tomorrow, by the way, is a bank holiday or public holiday in the U.S. because of Thanksgiving. So the afternoon, European afternoon, the New York session could therefore, I would assume, be not as volatile as it normally could be, right? That's something you should be aware of. And Friday is the last day of the month, by the way, so that always can be a bit wacky as well. So something to keep in mind. Alrighty, so let's take a look at the charts. Price dipped down yesterday to 124 in pounds. That was unexpected in my opinion. But I did say it was an option. Remember, I don't have my drawing tool. Sorry, 1 second. Alrighty, sorry about that. Alright, so I did say it was an option that you can get a zigzag correction like that. Still, it looked like a good breakout to me, but this is one of the things that, of course, is annoying if you have a tight stop loss, because then these zigzags get you into trouble, most likely. So there are probably various methods and entries that a person could have had in this zone. One could have had it a bit higher, one could have had lower, and various stop loss potentials. Some are out, some are still in, and it really depends which one everyone chose. What if you're still in that trade, or if you're out of that trade for a loss. Now at this moment, in fact, price is at the 61.8 fib, and it's still at a resistance. No, 50 fib. Oh, I guess if you put it like this, it's a 61.8. So it depends how you fib it. This is a 50 fib. In any case, there's actually a confluence between both fibs. So there's actually, a resistance zone right there where price is stopping. If you put a fib on this upside right here, you can see we stopped at the minus 272 target, just actually shy of the minus 618. Do you see that? Just a few pips shy. 1 second, please. Sorry about that. I had to sneeze. So yes, this is to me looking like a resistance zone. Price is now making a range after an impulse, but in my opinion, that is happening at resistance. So I wouldn't be all too fan of the upside at this moment, the upside break. In my opinion, it's actually still in a shorting zone, but I wouldn't put the stop loss above this high. I would put the stop loss all the way above here or even above here. And a tighter one could be above the 61.8 fib, which is the next resistance zone at about 125.20, 125.30. That could be the next resistance level, and it would be a tighter stop loss. So which means that it would be probably better to be active in managing that setup, not trying to get out before a full loss is encountered. Don't forget that the stop loss is a stop loss, but it doesn't mean we have to stay all the way in that trade till the stop loss is hit, of course. One tactic could be, we talked about stop losses yesterday, of course, in the webinar. Another tactic that I actually didn't mention yesterday was, I think I didn't, was putting a looser stop loss, but having a mental stop loss that is lower. So a factual stop loss here with the real level in the platform, but having a mental stop loss, somewhere below it. So that if price hits that level, then you're looking for dips to exit for smaller loss. And that's how you can keep losses on the smaller side, for instance, by the way. There was something I wanted to mention yesterday, and I didn't know what it was. That was one of the things. But anyhow, so that could be done too. One could have a stop loss here, all the way up here. But if it does pass through the 61.8, try to exit on a dip down for maybe close to break even, in fact. So I think it's, very simply put, I think it's shorting territory at this point. No matter what strategy I look at. We're not even looking at a specific strategy. It's supposed to be a strategy webinar. Sorry about that. But I'm just looking at the current euro-dollar an hour, and it still looks like a shorting environment to me. It's just a question of where's the stop loss on TP. Whatever stop loss is chosen, the TP has to kind of correspond with that. If you use a tight stop loss, I wouldn't aim for the very last pip to the downside here. I wouldn't aim for 120, for instance. You could aim for 120 if you use a very wide stop loss, and if you put the stop loss above 126. Then yes, one could aim for 121, 122. If one uses really the very tight stop loss here above this top, it's still possible, but there is, of course, a higher risk that price will go through that level. And one could go for a more conservative target at aiming for this bottom, for instance, here, or a slightly more aggressive one, which could be indeed aiming for probably some pivot points. Let's take a look. Maybe the weekly S1, for instance, would be a more aggressive one. Daily S2, daily S1, those would be more conservative ones. Which one each of us chooses also depends really how we like to trade, what our personal preference is, how our psychology fits more to which method. But in general, there's nothing wrong with looser stop losses. Most traders have something against it somehow because they think that they're losing control of the trade, I think it is. They think that because price is going against their position, they're not in control of the trade. And it's a natural thing to think about, I think. Most traders probably have. But also the flip side is that, okay, we're not in control at the moment, but we have more options to exit a trade at less than a full loss. But that's not an easy mental framework. There are better win percentage chances probably. In any case, if you use a tighter stop loss, then actively managing it and getting out for 30, 40, 50, you know, it's pretty good. And if it doesn't go our way, try to get out then, because it could turn and hit our stop loss. But anyhow, that's a different. I'm going back to yesterday's webinar. It's not my intention. Let's take a look at other time frames. If price doesn't move down, then I would expect price to stop at the minus 618 target. If you use the Forex strategy, then the minus 618 target, no, that isn't the minus 618 target already. The next target would be the minus 1000 at 125.27. So the next resistance level would be 125.25. Using fibs, there's a bit of confluence in that level, as there's a 78.6 and a 61.8 fib. So that's the fib strategy, basically. Either shorting it here upon this target or here. Using moving averages, we would need a candle close below the 21 band, below 124.40, with a 4-hour candle. On hourly, we would need to close below the daily and weekly pivot point, and a candle close that is close to the low, below the band as well, as a breakout trade. From a Camarilla point of view, we need price to go to 124.50, bounce roughly at this level, and then break again through it. And to me, that would seem like a breakout trade then, with the target at L5. And a trend line, last but not least, the trend line, a break of this trend line. You can see sometimes how nasty trend lines can be when we broke this one, but we got to close in reverse. Doesn't mean, though, that this trend line is still not valid. Last but not least, this reversal template. Let's take a look at the 4-hour chart here. Yeah, there's nothing really special on this template. I mean, price is hanging in the middle. I really don't see anything special on this template that is worth mentioning. So no. Alrighty. That's, I guess, all that's euro dollar. I mean, basically we reviewed euro dollar with various angles and methods, right? Alrighty. Now let's take a look at another currency pair. Pound dollar. Basically, I really don't want to spend too much time on the pound dollar because in my opinion, the most important factor is this wedge. So whatever strategy we apply, it's all about this wedge. From a moving average point of view, we need a candle close below this band. But as you can see, that's not always a guarantee of follow-through. Look at this close below the band. So in reality, I think the better moment to look for is probably the trendline break to the downside. If it breaks to the upside, as I said yesterday, I'm looking for a false break and a rejection at the fibs. Wait, let me just check something. Already. So that's what I said yesterday. Still basically the same thing. Either the breakout or the move up, and then into basically a fib level, which could be the rejection resistance spot for downside trend continuation. So any candlestick patterns at these fibs, I'll be interested in shorting, and any breaks could be also good for shorts. That's still the same stuff in the long term. Let's see, pound news, yes. So anyhow, doesn't look like these setups are going to happen within the next hour. But if they do, anyhow, there's that news event indeed. The news event could, of course, give that acceleration for an upside spike. And maybe after the news event kind of dies down, we could see some exhaustion as it hits these fibs. That could be kind of the accelerator, the catalyst that could push price up, in fact. It's possible. Otherwise, I wouldn't see price being able to push through it. But a news event could certainly do that easily. So be careful of that. Otherwise, I really don't have much to add on the pound dollar. Just thinking, let me check the Camarilla here. You see, price is already pretty far away from the bottom of the wedge. So before we get to the bottom of the wedge, you're already at L5. That's a bit of a problem for the downside from an intraday perspective. But it could always accelerate through that. But it is hanging quite high against this resistance. And it looks like a bull flag. So I'm not all too sure if price wouldn't be able to break through it at this point, if you look at it from that perspective. But I wouldn't want to trade it. I would rather wait for rejection here. Dollar yen is sailing lower than I expected. It's kind of making from a chart pattern point of view, it's making a falling wedge. So if it breaks the falling wedge, that could be a good long yet again. Yesterday's long didn't go too far. Just a bit and went then downwards. The day before, the long was a bit better. So it's a bit choppy, as you can see. Some down, some up, some down. As long as price stays above this lower magenta line, let me make it a bit different. Like this, blue. As long as price stays above blue, at least, it's definitely bullish. In fact, even if it hits the minus 272 target, I can still consider it bullish. Even all the way down to the minus 618. It could be a zigzag correction. I would still expect these to be bouncing spots. Obviously, it's better if price breaks the rising wedge. That would be the best bullish scenario. The entry could be if price shows a solid close above, for instance, these 1 hour tops. So this is more chart pattern trading. If we look at different templates, well, Fibonacci, first of all, is entries would be at the minus 618 target. The breakout wouldn't have a fib target, fib entry. We would need actually price to break. We would need to put a fib from here to here, and then let it go back to the 38.2 fib or 50 fib for an entry. So we don't have that right now, right here. But let's take a look at others, like the other strategies like the moving average and pivot point. From a moving average point of view, there's divergence, but one more push, considering resistance, one more push is possible. We would need to close above the 21 band, and preferably push through this resistance spot as well. that is something we need on the 4-hour chart. Then we have the, let's see, 1-hour chart with the moving averages. They're actually now intertwined. So the trend is actually, at this moment, on the hourly, getting into serious trouble. 4 hours still okay-ish. On the moving average point of view, it seems like the only time frame that has a setup is the 4-hour. Then we can take a look at the Camarilla. Camarilla would need price to go to H3 and then start making a flag and then breaking through it. Pivot points, let's see, we have a daily pivot point. Yeah, everything points to the fact that we need price really to, in this regard, maybe the break of the falling wedge is not the greatest. I mean, if I look at moving averages and the pivot points, I would probably rather wait for a bit of more confirmation, evidence that price is willing and has the energy to push up, and then look for a small dip to take it up. Otherwise, if it just makes a bit of upside and doesn't push through far enough, we could just see that as a retracement. These bands are 21. So I'm using nowadays more 21, but 34 are just as good, in my opinion. Aussie, let's take a look. Let's take a look at the Kiwi, sorry. Let's see, Alec was asking about the Kiwi. Let me find it. So first, let's take a look from a blank sheet, blank chart. And we see resistance here, but also quite a lot of sideways zone. Alec is saying there's a head and shoulders on the 4-hour chart. Yeah, indeed. Nice one. True. Price broke through the neckline, in fact. That neckline. Price is also respecting, looks like a support line like this. And there's a resistance line. So it could be a channel. It's a bit choppy, but it's possible. We certainly broke through this support line already. Let's put a fib on as well from here to here. Came very close to hitting the minus 618, but didn't totally. Yeah, in that regard, one would expect a further fall down to the bottom of that range from this perspective. We can put a fib on the very first correction here. It's moving up. We just hit the minus 618. There are two wicks on top here. Wait, let me check if I have the fib correctly. Yeah, we just hit the minus 618 with a shooting star. Let's see if there's any other confirmation here. Close to the 50 fib too. So that could make actually an interesting short. It could be even now. I mean, this is a decent wick. It's close to this trend line. I'm not sure how valid that trend line is. Sorry. Pretty decent retracement of yesterday's bearish candle. Yesterday's high is good to know where that is. Yeah, I'm doubting to take a short now or to let this hour close, one more hour close. Between those two, either wait for one more hour of confirmation to see if we get another wick. If it's another hour like this wick that we had last hour, that should be enough to give the confirmation. If the hourly would have been a bit more bearish, a full doji, not any bullishness, that would have probably been enough for me to take it right then. But right now, because it's an hourly, it's quite a small candle still. 4-hour candle, this could be enough. A shooting star like that, especially at the -618 target. Now I'm still more leaning towards letting this hour finish and seeing how this hour candle closes. Another option would be just to wait for the 4-hour candle, by the way, and see how the 4-hour candle closes. If there's some wick on top, then that should be enough. Stop losses, various levels, of course, again. Tighter one could be using yesterday's high. A looser one would have to use last week's high. Let's take a look. That would be up here. That would be a looser one. Somewhere in between would be using this daily fractal here. Those are kind of the 3 levels, I would say. Targets, the bottom probably of this wedge. If we put a fib from here to here, main target -618, 77.50. With extension to 77. From a 30-minute point of view, we're at the H3, just a bit above it. From a 30-minute point of view, we have some wicks here. And as we know, H3 could always be a shorting zone in a downtrend. Let's see, if price does make a twist here, a turn, with a mini head and shoulders on the 5, then we should see the break of this neckline. And we should see price maybe hit the -618 and then bounce again, for instance. Then that retracement, this bounce, we would probably see that on the hourly chart. Some kind of wick again on the hourly. And then wait for a bit of retracement, and that could be the short to take. Let's see if it makes sense because the euro dollar is also moving, I would expect to move down, or at least it's in a bearish environment, to put it more cautiously. The Aussie, let's see if that's the same. Oh wait, one thing I forgot to actually mention. Daily candle, if the daily candle is able to close below this band, that could be a breakout. And from an hourly point of view, we need a candle close below the daily pivot point and 21 band, basically. Alrighty, Aussie had a bearish day yesterday, is pushing lower and lower. Yeah, the thing is, it's right at the bottom now, right? So there's not much options at this point, I think. Pretty good momentum though. Let's take a look at the fibs. If we put a fib from here to here, hit the target from here to here. We just hit the minus 272 target. Let's see. I guess, let me take a look at the 1 hour chart. At this point of view, there's nothing really to trade. From a technical point of view, it's too close to the bottom. If it does make a bear flag, that would be different. Started to make one. Let's take a look at a different point of view from from this template. Well, in this case, we didn't already break out on the Kiwi here, so prices already move far from the moving averages. We would need to hook back and bounce again below it. Daily 2, it's actually broke below the 21 band, but those breakout trades have already happened. Hourly is different. Hourly is traced back to it, so yes, if it's able to break through it could be one. But I guess I would be careful of the close below the 21 band because it could easily turn into a bear flag. So that's something I would be cautious of. From the Camarilla point of view, you can see Camarilla would suggest waiting for L3, which I think makes sense. Because a break of the blue line, or even I should say the moving averages, we could have this problem. So the Aussie, from a higher point of view, it seems like the trade is already past us. The bearish trade was already earlier this week. The lower time frames could be kind of like a scale-in if price gets below 85 and the L3 long in an intraday breakout bearishness. Alrighty, let's take a look at New Zealand. Okay, let's take a look at that. Let me find it first of all. Sorry to hear that, Jörg, but glad that you made it. That you still made it, despite that. Even a bit later. No, glad that you're here. Basically, to give you a quick recap, basically, it's that I'm looking for euro dollar to move down from this zone. Pound dollar to make a false break up or a bearish break of the consolidation, and Dalian upside if it is able to push through the daily pivot point, if I remember correctly. Can't find the pound New Zealand. Excuse me, I can't find the pound New Zealand. Let me add that. Well, the New Zealand, yeah, it's having a pretty strong break to the downside, in fact. Now, I was long in the New Zealand, and it's probably a loss at this point. I had my stop loss a bit wider below this bottom, so not sure. Let me check. Yeah, that's a loss indeed. Last week I took a long, so that trade turned into a loss. And it didn't get the upside. Now, the odd New Zealand, to me, it looked like a pretty good daily pin bar here. But as you can see, if it takes too long for price to move up after a pin bar like that, it's a sign of weakness, because then you get a range like that, and that pin bar is really not valid anymore. It's still there. I mean, it's not the pin bar didn't disappear, but because of the time, as it goes sideways, the market is seeing that price is not reacting to that pin bar, and by going sideways, the longer it goes sideways, the more kind of that pin bar is less relevant, if you see what I mean. So it eventually cracked. Now, I didn't get out earlier, so here I took a normal loss. There was really not that much option for me to get out, although I was a bit worried about the trade. If it would have lasted longer, if it would have lasted maybe still one more bounce, maybe would have thought about taking it off, but it didn't really. Anyhow, doesn't matter. That was my reason for taking it long. At this point, we're looking at the weekly. You can see that we're basically with this break, we're going through a trend line like that. So it could be a pretty bearish break, in fact, for this New Zealand to retest maybe these bottoms here. Obviously, if we put a fib from here to here, we'll have some levels of support that we might want to be cautious of. So if we do that, the 61.8 fib is pretty close by. We can put a fibs on this downside too to see where the targets are. That would require a lot of fibs though. Let's do it very quickly. Yeah, we have a confluence between the 61.8 and minus 272 target, so we could see a bounce. But after that bounce, I think it could be an interesting shorting zone. Actually, it's a shorting zone where we had this sideways zone, which is now a supply-demand zone. If we make that drop here, it is a supply-demand zone. So if you get a bounce there and you hook back to that zone, it could be a short for down to the minus 618 target. Right here, I wouldn't do anything at this point. From a Camarilla point of view, we're at the L3. So that could be, if we do bounce slightly, it could be a breakout when we push through the L3. Target is L4, L5, L5 probably. I'm not sure exactly where our fibs are compared to the L5. One second, let me check. 61.8 is at the L4. There's not really a lot of space there. Yeah, it doesn't have to stop there. I mean, but if you like fibs, then you would want to be careful of it. I mean, price did stop here and here, roughly, but not exactly either. So, in my opinion, I like fibs. So for me, I will, yeah, wait. In this case, I would rather wait. If you look at it from a 4-hour moving average point of view, and not from the daily pin par, then actually we had a breakout trade about under this blue line or under these moving averages, but that was in the past. Let's see, take a look at pound yen. We can do that. Let's see, Bay, you also asked me a question, what is the 3-line channel? This channel is a 21 EMA band. Let me write it down for you. 21 EMAs, close, high, and low. All right, so let's move on. Sorry if this is going a bit slower than usual. I think it's still, I'm having a cold, so not the fastest maybe in that regard. So sorry for that. This is the pound yen. Let's take a look. Let's take a look at the blank template and then look at strategy templates. Pound yen. it's kind of dying down here. It looks like it's making a wedge on this time frame here, like that. So definitely, from a chart pattern point of view, it's an uptrend. It has a wedge, a contracting wedge, and it could be the breakout. From a 4-hour point of view, there's a double top, but it doesn't have to always be a reversal. It could, but then it would have to break through at the bottom. The bottom of the wedge, I mean, this blue line. Yeah, it's the news, so it would have to be after that. If it is a reversal, then we would see it fall to these targets. But you know, sometimes these double tops are just like pausing moments in a wedge, and then you see the breakout. So they're not like always reversal levels. All right, but still, it's good to keep an eye on it. For the moment, though, I would be more inclined to say prices more likely to break to the upside here. Okay, let's take a look at the other template. In the meantime, let me just quickly scan. I have a feeling I missed a question somehow. But maybe I didn't. Yeah, Kalian was asking about the target for EU. Okay. Let me just check if I missed something else. Yeah, that's it. Okay. Paulian, yes. A close above the daily pivot point with the hourly close, with the close above the daily pivot point, with a close near the high would be a breakout candle that is sufficient. 4-hour chart would want to see price head through this resistance. It's kind of like the dollar yen, isn't it? Your dollar target, it's actually still going sideways at the moment, funny enough. Target to the downside is, well, the main target, in my opinion, is $122.40. Anywhere between 121.50, 122.50 is a potential bouncing spot. The very max, indeed, 120, indeed. Now, why a bit higher than 120 at first, I say, because of this trend line here. And that comes in a bit higher than the 120. But ultimately, 120, indeed, is the last level that I would expect before we see some support. Now, when price gets there, I would expect some pause at this support level, but ultimately, I would expect to break through it and price to move lower, in fact. But will that happen? I don't know. But this is, in any case, a support level we shouldn't ignore, and we should realize that could have, and of course, the horizontal level at 120. These two levels we should be aware of, that they definitely could cause a bounce. From an intraday perspective, if someone's taking H3 short and H4 short, then L5 or L4 could be two good targets from an intraday perspective. Price is still moving up, and indeed is unfortunately making this kind of like a flag, and it's pushing through that. Now, that's not a flag I like to trade. I saw the flag, but I didn't like the upside there, because it's an bearish environment for me, at least. But on the 30-minute chart, funny enough, it actually had already bullishly aligned moving averages, but something that I didn't want to trade. And if anything, I'm looking for, as I already said, rejection here. But then if you're looking for an intraday trade and you want to exit at the end of the day, then you have to, of course, aim for closer to current price, and not aim for 122.50 because that would take longer to develop, obviously, right? So depends on the time frame you have in mind. The euro is pushing harder against the Aussie and the New Zealand. Let's talk about the New Zealand. Euro New Zealand yesterday as well. It pushed further than the minus 618 here. I had some doubts about this candle because the body of that candle is about halfway bullish. So that made me a bit wary. After that, I didn't see any signals that I really, really liked a lot. And price ultimately pushed to the minus 618. And this very small pin bar, it was, I mean, its size was too small, but it was a pin bar. Got hammered with another candle above it, although this one had a wick, and then slowly we started to move down. But on an hourly perspective, that downside is looking pretty slowish still. Looking more like a bull flag. So if anyone is in that short, moving a stop loss, a trail stop, just above this maybe even exiting here for about break even makes sense, I think. The overall environment is looking a bit wacky. Now, if you still like the resistance close by, there's nothing wrong with keeping the stop loss still here and just holding on to that trade. If someone is still in it, of course. Maybe some of you are already out. Let's see, Pound New Zealand, minus 272 target. Price stopped at the minus 272 target. Looking for the minus 618 though, I was saying yesterday. Pound odd, also looking for the minus 618. But all of these pound odd, euro odds are moving up. Euro New Zealand, pound New Zealand are moving up pretty aggressively. So I would be cautious with them. Eventually they're going to have to make some retracement. I would really want to see some good confirmation. Maybe even look at the 4-hour candles, because the hourly could give signals on the early side, too early. Euro yen doesn't look that great. I'm going to skip that one. Price is pretty choppy in this zone, right near the pivot points. If it does break eventually, I will keep an eye on it, perhaps for intraday longs. But I want to see some confirmation first. Dollar CAD, let's take a look. $11.66. Let's take a look at that. $11.66. Well, it definitely is at support. That's good. Let's take a look at the fibs. Just bounced off the minus 272 here. Minus 618, excuse me. I think it makes sense, yeah. If it gets there, there is a daily support level in here. So ultimately, it could be the last bouncing spot. Probably the best stop loss would be below this daily bottom, in fact. Now, if price gets there, it's difficult to tell at this moment. Could, because this trend line could be another support reason. From a breakout point of view, we would need price to go above this resistance line and the 21 band. 4-hour chart is already in a questionable, it's not even in an uptrend anymore. Daily is, but the 4-hour isn't. So we'd need a good breakout candle above this blue line. And the hourly is just a mess. Now we've looked at many pairs. Let's take a look at gold, not doing anything at the moment. We have a referendum on Sunday, I think, or Saturday. Pound SLC looks like a bull flag, by the way, after some upside. Not really a big trend going on, though, so it's a bit risky. Oddcat. Oddcat eventually did break that bottom, in fact. When we were looking at it here, I said, well, it's right at the bottom, but it did break through it. There was a good candle also breaking through it, so it didn't pull back though. So if one waited for the pullback, then it wouldn't have happened. But if this person took this breakout candle because it did have a very strong close near the low, then it would have been a good trade. The odd cat is actually looking like a nice bear flag. Stumbling on my words today. And it's in a good breakout to the downside. Good breakout here already for a while. Here we had good engulfing twins, here good breakout candle, and we're moving every day with lower and lower lows and highs. So let's take a look at entry potentials. 1 second, let me move to a different template. Probably hook back to about this level, the broken bottom, the breakout candle itself. About halfway, this hourly candle. Stop loss above H3 and a target at L4. Yeah, first target daily S1, second daily S2, and weekly S3. The others in this pushing through the 61.8, by the way. So that's all of the pairs that I normally look at, plus a few more. Is there anything you would like to still look at now? If I had to choose between all these pairs, I really don't know at this moment. Looking at the board, there's not really a lot that interests me right now. Euro dollar, I guess, is the main one. Yes, if I think about it, the euro dollar. Otherwise, it's more of a waiting mode. Pound dollar, dollar yen, pound yen, euro odd, pound odd, euro New Zealand, pound New Zealand, they're all retracing up, but getting closer to minus 618 target, which could be interesting, but they have to get to the target and then also stop at the target. But if they do stop at the target, then that could be interesting shorts on those pairs. The runner-up, I guess, after the euro dollar would be the odd CAD, in fact. Euro CAD is indeed making that zigzag. Remember, I put the fib from here to here, stopped at the 38.2 fib. So probably can get up to the minus 618 target too. This could be a resistance zone. Yep, cheers, Bob. See you very soon indeed. the pound calf. So that's basically the top two, in my opinion. There's potential maybe throughout the day on other pairs, but we'll have to keep an eye on them. Could be a inverted head and shoulders. Neckline is about here, isn't it? Looks like it's trying to break through, in fact. Break through the wedge to the upside. So let's take that info and then take a look at this one. Pushing through the H3. Yeah, it could be something, I mean, I'm not a very big fan of it, but theoretically it looks like a break of a wedge. Could be a break, pullback, continue. If I would trade it right now, no. 4-hour chart is still bearish. It is trying to push through the 21 band. If it does close with a 4-hour candle above it, that could be the signal of a reversal. There is divergence between these bottoms, but I would need to close on a 4-hour chart that is above 177.12, plus not all too far from the high. All right, so yes, I will definitely get back to you, Tristan. I just ran out of time yesterday. But I did get it. I did receive the email. And I will definitely get back to you either today or tomorrow. Very max tomorrow. So this is probably how I'd take a look at the pound cat. But it is a reversal trade. That's without doubt. Odds Swiss C, let's take a look. That's a funky range here, wasn't it? So I'm just flipping some charts very quickly. It is getting, it wasn't in a wide, long, drawn-out sideways zone, but it's now approaching this bottom and trying to break through it, in fact, or is already. Wow, it was a bit wacky. And when it makes these kind of wacky things, it's not easy. But obviously the momentum is down, so I wouldn't know how to trade it from a classical point of view. We had maybe a small bear flag. If anything, we could maybe wait for retracement for more downside. If this candle closes near the low, it has to be a very good bearish candle. Otherwise, if it's too much wick out, skip it. If it's a good bearish candle, it could be a retracement, put stop loss above here very tight, and try to trail stop it. It could be okay. I mean, I'm not a big fan of it, but it's possible. I think I wouldn't trade it myself, by the way, but if one really wanted to trade it, it could be a plan. Let me say it this way. From a 30-minute point of view, we're at the L3, so that could be a bouncing spot indeed if it bounces back up. And we see some candlestick pattern here to confirm that we're turning around. It could be a good pullback and go on the odds Swissy. That's really the only way to trade it on a lower time frame, because if you look at the higher time frames, it's not easy to trade with when you have prices going like this. Where do you put the stop loss? You take an entry here, you put the stop loss there, it's massive. So that makes it difficult to trade from a higher time frame perspective. unless someone was looking, yeah, no, that's really, I mean, unless you were looking at the daily candle, maybe earlier today, and I don't know, took it upon this retracement a bit and put the stop loss above yesterday's high. From a daily perspective, I wouldn't do it. I mean, I'm just trying to think of reasons, options of what someone could have done at the end of yesterday, but I don't think this is too likely. It's difficult to trade this when price is at the bottom here. If anything, one could even think of the fact that price could be heading back up because it's been in a range. So now we see it hasn't done that. All right, so if you have more questions, let me know. Otherwise, take a look at Nenet's webinar tonight. Let me take a look at the topic. It is on standard and non-standard trend and reversal patterns in price action trading at 5 p.m. GMT time. Then Sunday or Saturday, Saturday in fact, sorry. Then it's going to have a premium webinar for real account holders. And next week we have the same schedule as always. Weekly recap on Monday, Tuesday, live trading lab. So with that said, I don't know if there's anything else you would like to take a look at. I think for me that's it. Let me take a last look then at the OddCat and Eurodollar, the ones that I found the most interesting right now. An Elliott Wave webinar, let me take a look. Fibonacci wave trading, yes, indeed, 2nd of December. So next week, Tuesday, we'll have indeed a wave trade, wave webinar. Bait, were you the one who asked for a wave webinar a while ago, actually? I remember. Great. Great, so that's finally indeed happening. The problem is that we scheduled always a while beforehand, so sometimes if I get requests, it takes a while, but so Eurodollar made a bit of upside, hit the H3 at this point. Let's see how it reacts to H3. As I said, in my opinion, in my 2 cents, it's all shorting. The higher, the better price, in fact, in my opinion. Obviously, if it pushes through this top, it doesn't look bearish, and especially if it breaks the last week high, then the whole thing is out of the window. Well, I guess with that said, I thank you all for joining me today and wish you good trading. Do you expect 2570? No, I wouldn't expect it, no. I would expect 2525 to be the very max today. But that's what I would think is the biggest confluence for a more downside if it does push up. Even here, I would expect a potential turn. Aussie target, let's see. Oh, Aussie is indeed pushing through the trend line and approaching 85. From a bigger perspective, let's put a fib on here to here. I'm not sure which time frame you're thinking, what time frame you're thinking about. From a daily perspective, 84.37. Minus 272, minus 618 at 81.70. From a 4-hour perspective, same thing, 84.30.70, minus 272 targets. After that, 83 as an in-between target until 81.70. from a pivot point of view, 83.70 is quite far. It's a monthly S3 and a daily S3. So if you're looking at more short-term targets, then the L5, 84.25. And there's even a daily S2 and a weekly S2 at 84.50, in fact, 84.48. So it does depend how tight the stop loss is. If you have a tight stop loss by any chance, I would aim for closer TPs to get out of the trade before it maybe makes a bigger retracement. Or not even a big retracement, but a retracement that's big enough to take out a stop loss. If it's a bit wider and the entry is higher, then I think there's more chance to stay in longer and for a lower target. All right, so that's my 2 cents. And thanks again. Wish you happy hunting, good trading, and see you all very soon, next week. Cheers. Oh, what happened with gold? Because it's going slow at the moment. Well, we have a referendum in Switzerland this weekend, and they're going to vote on a measurement. No, they're going to vote on a rule for the central bank that would, if passed, would require the central bank to have 20% of their assets in gold, physical gold, and that's why it could impact the Swissy and gold. Probably there would be, at the moment they have 10% of their assets in gold, so that would require them to double their gold at this moment, which means they would have to, I don't know exactly how fast, but eventually they'll have to buy some gold, at least a decent amount of gold. So that would pick up demand for gold, therefore potentially impacting price. So that's this weekend, the referendum. Alec is saying yesterday was a shock. Not sure what happened yesterday. Looks like it's going sideways here. So let's see what the Swiss will vote. It will be interesting. All right, so see you all soon. Cheers.